A failure to reverse at a key level can signify a continuation signature in the market. This is the logic I'm going to use to break down the trade I took on Nasdaq this morning, netting me just over $7,000 across my funded accounts. Okay, so what we're going to start off, like every day, is a top-down perspective of the daily and weekly charts. This is how I'm going to approach framing my daily bias. So as you can see right here, I have the previous week high, low, and the equilibrium. Now looking at the previous weekly close last week, I can see that we displaced through the previous weekly low. Therefore, my draw on liquidity for the next week is going to be as simple as seeking the previous week low and seeing if we can tag this liquidity and any other resting liquidity that is below it. This is true for both NASDAQ and ES. So now that I have those levels on my chart, which I will annotate here, previous week low, I'm now going to shift to my daily chart to look at how Friday closed and plan out my plan of attack for Monday. So on Friday, you can see that we closed with an rejection of the low and a closure back into the range. Now this typically signifies bullish price action. So before today, Monday prints, we can use our replay function so that we can't see how today printed. We might be anticipating the previous daily high. So despite the weekly candle being bearish and us anticipating lower draws, we may have anticipated that today draws into this high, which would be Friday's high. So I'm going to have a condition now for the Monday trading session. If I am bullish, I am anticipating that this wick will support price higher, and we will see a daily template that will see a low created inside of this wick, no lower than around 50% or the consequent encroachment of that wick. If I'm bullish and this wick supports price, I can anticipate that the previous day high will be the draw on liquidity. Therefore, the inverse can be true and stated for a bearish thesis. If price fails to form a significant low, an intraday low, at this 50% wick or around this area, I can anticipate that the reversal may fail and instead we will see continuation of the bearish order flow into sell side liquidity, i.e. Friday's low, which is also the previous week low. This is how I will approach my daily analysis, giving myself a condition of order flow such that by the time the New York session opens, I can evaluate if I'm going to be seeking the previous day high or a failure of the reversal and to instead seek the previous day's low. So now the question I have to ask myself is, why was I anticipating a reversal anyways? This wick in and of itself is not enough to justify a reversal on the daily chart. I will also need to see a key level and a lower time frame delivery state shift. Zooming out, if we look at the opposing side of the range, we can see that we have sell stops being liquidated below this daily low, and we have an imbalance on the NASDAQ that we form a bullish SMT divergence within. So I will mark out that imbalance on the S&P and the NASDAQ respectively so that we can monitor the imbalance that formed on Friday's session close. As you can see, ES trades into the imbalance while NASDAQ does not. From that, if we adjust our time frames down, you can see that we get a closure through the consecutive series of opposing candles into that key level that forms divergence. So that means if we are going to trade higher, I want to see a local swing on the daily chart created here at this low with SMT divergence inside of my key level. And then I want to see this change in state of delivery support price higher. As you can see, Friday afternoon, we run the external range high and we close back into the range. And I would be anticipating, if there is a continuation framework, to see price trade back into no more than 50% of this opposing run, which would be the mean threshold of this order block, which you can see overlaps with that daily wick, therefore forming a open, low, high, close continuation profile, right? Validating this as a reversal and a structural swing point on our daily chart, perhaps seeking buy-side liquidity. Now, like I said, A failure to reverse can be an indication that there will be a continuation of the bearish order flow. So just as I'm evaluating this as a potential reversal, I will say that any significant trade or price action that trades through this low and creates a meaningful swing that is then violated through this 50% area can validate a draw on liquidity of the previous week low, the daily imbalance, and any other forms of liquidity that rest to the left. So if I go back to my daily chart, I can say that if price does not want to form a meaningful reversal off of that low, then we may seek out this daily imbalance and perhaps the other side of the range, this weekly swing point. So I will have these marked out on my chart as well as external range draws if we fail to reverse. So now we have quite a bit of framework to approach today's session. We have a relative draw of equal highs and lows, and we want to evaluate how this key level is interacted with in the market moving into the session. To frame the bearish case, I'm also going to pay attention to my last major consolidation. And again, you can see the full trade breakdown on my Twitter. I will be viewing this as the original consolidation of this 4-hour sell model, and therefore be using this fractal here to determine what the standard deviation projections are for lower prices. For example, trading in to this imbalance, right? Using this as the consolidation, first stage of reaccumulation during NFP, second phase of accumulation during this Friday and Thursday session, and then distribution lower. Go check my Twitter for that market maker sell model fractal. Okay, so now I have my analysis. I can now go on to the hourly chart and play out the session until New York opens. So as you can see, we immediately start the day by gapping down, forming a swing low inside of my key level. We now have a new day opening gap, which I would like to see price not respect. I would like to see price trade through the new day opening gap, then use it as a relative area of support to then trade higher in the New York session. Because, like I mentioned before, we formed a significant swing inside of our key institutional level, framing this reversal. The consequent encroachment of the wick or the 50% of this order block, it's the same level. So now coming into the New York session, I can simply say, if we trade through this low, if then statements, if we trade through this low, then I will be targeting this liquidity of the market. The pending sell stops that rest below Friday's low, the daily imbalance, and like I said, potentially even the other side of the range, the extreme low. If we can stay above this high and form a new swing and trade above the new week opening gap, I will be targeting buy side liquidity, previous day high, the resting buy stops in the market. This gives me a game plan for the New York AM session, and now I can proceed to play out the rest of the candles until we get to 8 a.m. Okay, so as we can see, London session now has formed a swing with minor divergence at the Asian highs inside of the new week opening gap. Once again, I'm recognizing that this new week opening gap I have marked out on my chart is not being inverted and offering support, but is instead being repriced and offering resistance. This does not support a reversal thesis, but instead adds confluence to the potential failure to reverse and continuation of the established bearish order flow. As I trade into 8 a.m., which is what the New York kill zone opening is, we can see we have traded through this Asian low. So if we trade through this low, my draw becomes lower. This was that if-then algorithmic statement that I made earlier. So paying attention to that, I now have an invalidation of the thesis to seek the other side, buy side, and I'm instead looking for a continuation lower. If we're going to continue lower in the market, I recognize that opposing candles are going to offer resistance. So this opposing candle in here, known as a bearish order block, I will have on my chart as a potential resistance for the market. This is my invalidation. We did not just simply sweep this liquidity and come back in the range. we closed through this low, so that means that this Asian liquidity and this swing point did not form a low of the day. I'm anticipating lower prices. Let's play out the 9 a.m. candle and see exactly what happens. So at 9 a.m., you can see we have something very interesting that occurs. We come in and we form a sweep of the previous hourly high, 8 a.m., inside of our key institutional level for continuation, our resistance or bearish order block. Noting this SMT divergence inside of the key level, I can now frame this as a reversal candle at 9 a.m., meaning I can drop down to a 5-minute chart, and I can understand a framework for pairing this SMT with the other side of the range, i.e. a C2 reversal. Once I see a run above this short-term high into the order block, forming SMT divergence, a closure through the consecutive series of opposing candles is once again a continuation, changes dated delivery, order block, and we can see that price does that. This would be the entry for a sell side delivery candle 2 reversal. The issue I have with this entry in here is the stop loss is proportionately quite high in regards to my draws on liquidity. Again, if I move up a few time frames, I'm going to be looking for draws on liquidity inside of this daily fair value gap. So of course we have the opening price. We also have this 4-hour imbalance, the opening price and this 4-hour imbalance. I can get rid of this box so we can just look at the key levels inside of this daily inefficiency that we're targeting. So as you can see, if I'm going to approach trading this reversal candle, I have a sub 2R trade to my final draw on liquidity below the previous weekly low. That is not an optimal framework for me to engage the market short. There is simply too much risk on both the ES and as well on NASDAQ, right? Risking 90 points here. And the first TP is only, right, 108 points. It's a sub 2R trade for me. So what I will instead do is now qualify this candle on the hourly chart as a reversal. 9 a.m. reversal can offer me a 10 a.m. continuation. So what I will be doing is now looking for 10 a.m. to form an opposing run, trade into a level of interest, and then continue lower. So I will utilize this logic, and I will track 10 a.m.'s open, which opens with no wick, right, having rejected the bearish order block on the 5-minute chart. And I will now say we have divergence forming at this first draw on liquidity, right? Previous week low and this 1-hour high. If price is going to reverse, a significant SMT will form in here and we will get a change in state of delivery higher. Again, I'm using a fractal logic. If price fails to reverse from this level, I will then frame a continuation lower. That is the logic. So what I'm going to do now that I have that logic is I am going to wait and see what happens if ES can maintain the divergence in the market. As you can see, the divergence is invalidated at this liquidity pool and previous week low. So my eye immediately draws to my next draw on liquidity. I now can say that price has not reversed here with significant divergence. Therefore, if it is going to reverse, it will reverse lower at a new higher time frame PD array, and I can frame a continuation of this 10 a.m. candle. Essentially, I can anticipate the following 15-minute candles within the 10 a.m. hour to expand right into my draw on liquidity, and I can look to involve myself with that order flow. So what I will do here is play out the next candle where you can see we start to respect bearish PD arrays inside the range, right? Inside or below, the range of the previous week low on NASDAQ, right? After we have taken out this liquidity. What I want to now see to get involved is an opposing run and a closure. I will use a change in state of delivery as my entry function. So I can see that 10:15 is the next 15-minute candle open, which is going to be one more candle. And we engage this key level once again, which we are respecting. You can see the 5-minute order block and this 3-minute imbalance. We get an opposing run into the imbalance, sweeping out short-term buy stops. Once we have swept up the short-term buy stops, we get a change in the state of delivery on the NASDAQ right here. My entry technique is going to be a closure entry of the SISD, risking 53 points and targeting, right, the other side of the range, my draw on liquidity. So I will be targeting 139 points for a 2.6 hour trade. As you notice, the relative weakness of NASDAQ here with the change in state of delivery forming first. Another option is to wait and take a retest of the change in state of delivery level, both of which are permissible. I am framing that this high in here is going to be the high of the 15-minute candle, which will continue to trade lower. What gave me an additional confluence was a order flow technique known as an immediate rebalance, where price, instead of pricing in a fair value gap or displacement here, comes back in and rebalances the wick low of the previous 15-minute candle. This adds confluence to this being the high, right? This fair value gap will support price lower. And now I look to engage the market as a continuation, right? Using this high as a protected stop loss, paying attention to each opposing run and how price is respecting the opposing candles, closing through them, and then trading lower. Notice how this 15-minute candle closes through the previous one, and so on and so forth until we reach our draw, with a closure through each consecutive candle, right? And a respect of each opposing run being a bearish order block until our draw on liquidity is met. So this was the trade I took. What I can do is I can maybe pull up an image of my TradeZella and just post that alongside of here so you can see, right? I took this trade across my funded accounts, netting me 6.3 thousand, and I took my entry at 10.21, right? As price retested the order block. Never mind, I did not enter on the closure. I entered on the retest. So in this candle, and I took my contracts off, right, at a 2-hour objective and left a runner, right? I was only in 2 contracts. So this is an example of a trade that I took using a continuation framework, using a 9 a.m. hourly reversal and a 10 a.m. continuation. And this is how I generally approach trading the New York session every single day. That is my Primo model using 9 or 10 as reversal and continuation frameworks. I look forward to continue to do these. Let me know your thoughts in the comments below and if you have any questions, and I'll be happy to answer them. Until next time, take it easy.